afternoon, everyone. It is Sunday, the 13th of September 2020. I'm having a look at the global indices and I'm starting off with the Dow. So worth noting here is that we were in an uptrend of high lows, high highs. We bumped up against 29,000. Prices come down and broken the most recent swing low on the daily, which in a nutshell means that this daily uptrend is now finished. And we have now entered into at the very least, a weekly retracement, which has already come down to recent support on a weekly level, resistance, potentially testing that for support. And so the first thing that I'm going to be doing this coming week is waiting to see if price can hold above this level to find support, produce a bullish weekly candle by the end of the week, which would then imply that the markets are likely to attempt next week to follow through and take another run to the upside. Means larger candles. I would immediately draw attention to that, or noticing that we had a series of smaller candles on the daily. We have gone into larger candles here, which implies volatility. And this is the kind of thing that can happen prior to a bigger move to the downside. I'm just drawing attention to the fact that the candles here are much bigger than they should be, and so that implies extra volatility. So the weekly in isolation looks good, coming back down to test that level of resistance for potential support. Next thing that I would comment on is that the monthly has now produced so far, we're halfway through the month, a rejection or an apparent rejection of all-time highs, producing a bearish candle, so we could end up sort of double topping here. I do also note so far the MACD is trending a bit lower, so there's a bit of bearish divergence on that as well as on the RSI. So the momentum indicators here implying that there is some weakness in the market. The weekly looks fine, and the daily here having broken its trend. So this tells me I should be expecting, or I should be more cautious. I now have to wait for the daily to produce some clarity on what it's looking for. But essentially the first thing I'm going to do, so plan A is looking to find bullish signals starting to show themselves up here on the 4-hourly, starting to see if a new uptrend starts to form, and also if the candles themselves start to reduce in terms of candle size back down to something a little bit more normal. At the same time, should price drop more drastically, then I can start to look for shorting opportunities on the 1-hour time frame, and then what I'll be doing is looking for price to head down towards 26,000 at the very least. Now, interestingly enough, on the higher time frames, the volatility doesn't really look that extreme. There hasn't been an increase in volume, so my first reaction here is not that this is necessarily the beginning of a big move to the downside, but that it is more likely to be a weekly retracement. But I'm prepared for both. Should there be a sudden quick drop down below the 27,000 level, then I can start to look for shorting opportunities to the downside, as I said. Looking and moving on to the S&P 500. Same thing again. We've broken sort of a most subtle trend here. We've got a weekly retracement back down to all-time highs, or at least previous all-time highs at that 3,300 mark. A move down, even a bit further down towards sort of 3,200 makes absolute sense to me. I'm okay with that, and that could be tested a little bit further this week. The monthly candle producing a bearish candle at this point is still inconclusive at this point in time. So likely the market simply wants to come back and retest the previous highs to see if it can find some support. So plan A, looking and monitoring that 4-hour time frame to see if price is going to find some stability and start to climb back up again, and plan B being that price breaks through this and starts to head down towards the next key levels of support and resistance. Again, looking at the NASDAQ, larger candles, just highlighting that going back even, wow, all the way back to May, that these candles have been relatively small, and that currently they are larger than they have been for a while. So the implication is that that is increased volatility and potentially fear. But even here on the weekly, it is the biggest retracement, or this is the biggest retracement we've had or shown for a while. And so I've also highlighted here these two areas here, this area here highlighted between the moving averages here, which is a potential buy zone or turning point for the weekly. And actually this area highlighted here is a monthly area between the 10 and 20 moving averages on the monthly. So really, and they also, by the way, happen to overlap with Fibonacci levels. Interestingly enough, this is a 382. The bottom of this box is a 382. The top of this box is a 50 fib retracement, and the bottom of this box is a 618. So all of these are in isolation valid in terms of healthy retracements for the longer term trend to the upside. But my plan A is to assume that it's going to potentially hold here first, and then see if we do break through that 10,000 level and start to drop more from that. That monthly is overextended. I've spoken about it in separate videos as to how in the longer term, of course, I'm anticipating a deeper pullback. The question is this the beginning of that deeper pullback? And the only thing that draws that says that that's a possibility is the larger candles here, which imply an increase in volatility. Okay, so plan A for me is, will price hold initially this week above this level at 11,000? If it breaks below that, and then I'm going to follow it down towards 10,300 and perhaps down to 10,000, and then take it from there. If it continues lower, so be it. But initially, as I said, I'm looking to see if it can hold above this level. Just having a look at the Russell 2000. This is now double topped up there. Okay, so just finding some clear, strong resistance at 1600, which I've spoken about before. This is something that's been unable to get past and is now really struggling with the idea. Even on the weekly, it doesn't look that bullish, but it is coming back down into the moving averages. So from a weekly perspective, this at the very least, we were overdue for a monthly retracement. We've definitely been overdue for a weekly retracement. And so it's a possibility that this is all we're getting at this point, is just a weekly retracement before it continues on upwards. The other thing I would just say here is looking at the, looking at the FTSE in the UK, this is not as bearish as I would expect. It's still managing to find support at that 5.8 level. And it's already produced a bullish swing low. The monthly, although we have produced a swing high here, the market seems so far is looking reluctant to continue through on that. So that is something that I think is fair to look at this week, is to see if that 6,000 level of price can stay above it and continue back up. This would imply the US markets will do it as well. At the same time, if it is unable to get past that and we see price head down from this point onwards, that would be a continuation of price unable to get through. 6,000 has become resistance and the market is starting to head lower. So it is a fork in the road to a degree. I think it is 55 bullish, 45 bearish, but I'm of course accepting the possibility that this could be the beginning of a bigger move to the downside. Then having a look at the DAX out of Germany, you can see here, looking at price here, quite bullish. Next time it comes up, a little bit of a rejection up there, and then a series of rejected highs above here. So no doubt above that 13,000 level, it is finding not as many buyers and is starting to get rejected a little bit more. It's also coming back up into those all-time highs. Okay, so this is significant. It's had a very big move all the way back up. It's recovered. And yes, the question is, what is it going to do? If I look at these most recent highs, the MACD is pretty flat, RSI is pretty flat. So in isolation, separate from the US, this market, although it is stalling a little bit, it is not looking exhausted. It's not looking very weak. It has some signs of struggle, but not necessarily exhaustion and weakness. Okay, so that tells me that there is still a possibility that this can tread water and hold on. So I'm going to move on. Let's just have a look at Eurostox. Eurostox encountering some strong resistance here. That daily is just treading water. You can see it visually just struggling to get over that level, that 370 level, and certainly on a monthly basis struggling to do it. But it's not just simply that weak, because we've had a strong bearish rejection candle here, which, if it was weak, would have just been followed by a move to the downside, but actually the market is managing to stay where it is. It's not able to get over the 370 line, but it also isn't collapsing just yet. So there are subtle hints the market is not necessarily as weak as we might think. Even here, looking at the Nikkei is actually really bullish on the daily. Very nice and bullish, very nice and bullish on the weekly. That is looking really good, coming up to those highs as well. This in isolation should be very, very bearish. It is looking really, really bullish. So there are, yes, potentially there are some mixed signals here, but if the Tokyo side, the Asian side, is looking not super bearish, it implies the market isn't necessarily as weak, and therefore that this is more likely to be a weekly retracement. Now, just wrapping up on the ASICs, strong resistance here as well, and the difference is that here it does start to look a little bit more like a swing high that could potentially gain momentum to the downside. So there really are kind of mixed signals, but it's not exactly 50-50. It's just a little bit more bullish than bearish, and so therefore I need to keep an eye on it. So therefore I have a plan A and a plan B. I'm not just going to lean to the downside. I need to see that it actually commits to that. And then so just wrapping up, kind of summary, as I said, need to see if the 4 hourly can manage to get back over the recent levels and get back into support and back into an uptrend. The daily, which would then follow back into that. At the same time, assuming that the very first thing we're encountering here is innocent until proven guilty, is that it's likely to just be a weekly retracement. And if it can recover from that, even if it goes down a little bit more and then finishes as a bullish candle by the end of next week, that would be a setup for this to continue to the upside. Then against that, the argument against that being closing into all-time highs, we've broken a lot of daily uptrends. Therefore the possibility is that if we drop and we start to fall through these levels of support, then I could start to look for opportunities to the downside. And so this isn't always the case, but I would say, looking at this, yes, this is what I would class as higher risk trading conditions, because of the evidence indicating that there are both bulls and bears present in the markets, and over the week we could see a push and a pull in either direction before we actually see how it ultimately resolves itself by the end of the week. So I'm going to exercise some caution, but I have a plan, and there may be opportunities on the lower time frames in either direction depending on how the week starts to unfold.